Dear colleagues, good afternoon. Thank you for accepting the invitation to be here with us today and at the meeting we're having right now. We have Mr. Hovhannes Khachatryan, the Deputy Governor of the Central Bank. Mr. Avetisyan to deliver the summary and one question per each right after the summary, and if time left afterwards you can continue. Thank you. Good afternoon. Can you hear me? Yes, you should. Okay, so thank you. Again, yes, thank you for the invitation. Just another time to publish the report on monetary policy published yesterday, where we in fact tried to present the main uncertainty sources and the perspectives in the monetary policy emanating therefrom. In fact, today I'm going to be going over the main provisions as presented in the report, and then closer to the end we'll have the chance to discuss the points and digest all the information and maybe discuss the details. So the essence, as usually in the external developments and the uncertainties emanating therefrom that have been taken into account in the monetary policy are in fact dictated by the uncertainties because of the geopolitics that we have been witnessing recently. And not only recently, these are specifically related to the trade policy and fiscal policy perspectives as designed by the United States on the one hand, and geopolitics, of course, on the other, and geopolitics pertaining to the neighboring regions as well. These are of interest for us because they are of economic consequence and respectively important for the global economy and for the economy in Armenia specifically, and for the monetary policy of Armenia. So that's where certain impact generated in consequence of the U.S. economic policies should also be taken into account. These are more uncertainties for us rather than any specific data. So negotiations with other states, some procrastination there after certain statements were made, and that's also creating certain background in terms of decency in planning for us. And we've also been seeing that significant import effect, which is, by the way, the main factor drawing the economic growth downwards. And in this background of uncertainties, we're also looking into some preemptive, looking into some preemptive quantities of import, trying to be on the secure side. These were the main things. On the other, China and some positive effects on the part of the European Union here. But then we can also see the forecasts in the United States for the second quarter. And these are yet forecasts, mostly going down, and then some return to the higher stakes. The main issue here is whether the demand environment in the United States, also in terms of inflation, is anyhow an incentive, or on the other hand may also be an impediment. And of course some uncertainties emanating from the fiscal policy of the United States. We have been seeing that the main programs as announced by Donald Trump in the short, medium or longer term may be of incentivization. On the other hand, some reduction in costs, spending and additional customer revenues might be brought into the play, but in average, not average, but kind of to look at the overall picture, then there have been certain actions pertaining towards incentivization, promotion, and here in that light specifically, there is a matter of bringing more certainty to the markets. So on the right side, the chart, you can see the USD and the bonds, and historically correlated, intertwined rather, but not that well visible in the last several months. Significant deviation between these two curves, and that is why these might be of additional risk for the United States here. We know that the rating companies have also extended their positions on the United States, but in fact all of those come to assert of the new reality that we have to deal with, specifically when there are certain points to be considered in the longer term debt in the United States, certain risks right here, and the markets have already started manifesting these. This brings uncertainty. Well, naturally, uncertainty in the migration policy, and I didn't converse those, but there are specific uncertainties emanating from the migration policy, and ultimately we have to deal with a situation where the inflation comes to some target indicators, and there are specific inflation components which are currently being far from the main targets. And at this stage and with this situation, there are kind of dichotomies in uncertainty, both in terms of the monetary policy. One is the longer term interest rates and the neutral interest rate, and I mentioned the main issue here is the level of the risk in the United States, trying to understand how it might be perceived, conceived by the economy, and also the stability of the debt on the other, and trying to understand how these might influence longer term interest rates and whether the monetary policy can be somehow extenuated or not, or maybe we have to deal with the higher levels irreversibly and inevitably. And also the demand component and the economic growth, where these issues have been taken into account in the labor market, and also the fiscal policy. In the medium to longer term, there are some uncertainties in terms of traceability. So the markings in the market at this moment have been fluctuating significantly, and the earmarking in the medium term and in the longer term has not yet been very clear. So these are important uncertainties that are of significance for our monetary policy, just in terms of possible consequences from the capital markets, I mean global capital, and also the global liquidity thresholds. Now, as regards the economy in the European Union, the main uncertainties are also related to the fiscal policy. Well, can be looking at those from that angle, specifically considering the new fiscal packages as announced, as launched, or launched in perspective, because these are more related to security measures and might also bring some incentivization with them, and kind of considering the demand background in the European Union. As for Russia, naturally some positive developments becoming visible recently. I'd rather say positive sentiment. No progress on the ground, given geopolitical or political solutions, but some sparks of positive sentiment in the economy, well manifested in essence with the expectations in inflation change. And in this regard, the National Bank of Russian Federation dropped the interest rates slightly. But in the medium term, long term, uncertainties will persist, obviously, also emanating from the fiscal policy on the one hand, and why not in the attempts of the country to bring some investment into the solution of the issues they are facing currently. So, I mean, mostly to create the sentiment, in creating the conducive environment with the respective attempts from the government that might contribute to some positive demand for the goods from Armenia specifically on the one hand, and on the other, since solutions are not clear in terms of migration policies, solutions are not clear in terms of geopolitical perspectives, then some of the uncertainties will remain. Let me also remind that there have been certain perspectives hypothetically discussed, trying to understand how would the flows continue towards Russia and from Russia, and we had the chance to converse this slightly during the previous discussion. And some of the surveys held showed that the main source of uncertainty for the migrants was in fact the unclear future in terms of actions, and that's why certain migration flows are being restrained. Now, As for the commodity markets, in fact, we deal with two sets of factors that move the price, well, on both sides, for the input and for the final products. We have been witnessing reducing demand, also considering the EU and China situations and possible negative backgrounds here. But on the other hand, there are certain shocks in the supply, specifically for the raw materials and crude oil, and given the situation in the Middle East, these all might bring us to the perception that there are certain forces that are going to be applied to bring the prices down, but there are significant risks of fluctuation. So if you follow the oil prices per day, you will see that there are even 10-15% fluctuations here. But we still have to deal with these two circumstances, and as for the food products, the FAO index has been taken into account. There is some growth, but we may also see groups or clusters of products that establish the overall index. There are certain trends that we've been observing, specifically given the manifestation of certain factors of supply. As was, I should say, we would rather face the risks of fluctuation, dynamic change with uncertainty and certain risks emanating therefrom. So, this is the situation externally. You canvassed the main sources of uncertainty. I would now try to identify the situation internally and the main problems we have identified. So as regards the risk overdue, well, we've been discussing this, specifically interested in the phenomenon when there was a reduction in the risk rating for Armenia and currently being at the lowest points. And naturally there were certain factors which would impact the risk level, as well as uncertainties falling out of that level. The biggest factor that we just discussed is the risk-free liquidity of the United States. I mean, these are the risks emanating from that economy, which for other countries of the world means that the relative risk in Armenia shrinks, prices respectively coming out of it. So historically, before, when such phenomena would occur with higher rates in the United States or perspectives for higher rates, then could have contributed to capital outflow from the developing countries, usually. But now we are dealing with the situation where higher interests or higher rates in the United States are not anyhow restraining policy, but specifically related to reassessment of the longer-term risk in that country, which provisionally would not contribute to the same phenomena, and we now have positive developments. Well, it might seem that this is normal, but of course there are risks pertaining to some uncertainty scenarios, because we also have to deal with the United States, which in terms of global liquidity and financial cycles, if not say is the leader, then is the main country, is the main generator. And depending on how long this story is going to go, respective issues might pop up. So reassessment of risks upwards might happen, and we've been looking into this also during the discussions of the council, of the board, I'm sorry. So, as for the economy internally, some slowdown in economic growth, it continues naturally. Why I say naturally? Because this was expected, predicted. I mean, this is the adjustment phenomenon which is okay. Adjusting is fine, and the growth is now coming closer to the longer-term potential assessments of ours, or estimates, comprising 5.5%. However, we have to deal with a multi-factor assessment. There are certain factors we will have to take into account, given the composition of the growth itself, the structure of the trend, specifically the processing industry, which has negatively impacted the overall economic growth. And we know that the larger share of it, or the main share, comes from the re-exporting processes that were launched last year. I mean, specifically the essential metals, and they have dropped. Now, statistically, I'm trying to understand whether they could be pronounced as negative impact on the economy, and that's where the main uncertainty is, because if you look at the left side of the chart, then economically, I mean economic activity-wise, those peaks were the consequence and didn't have significant effect just because of those factors that I just mentioned. But they had to be mirrored, respectively, in the dropping phase. But in fact, it more contributes to economic growth. So that's the main uncertainty which we have here, which also means that uncertainty upwards. Yes. I mean, yeah. Okay, just a story for your information so that you understand. Specifically in the processing industry, apart from the essential metals, wherever we had 4 to 5% growth, if we remove those effects, then it's about 8 to 9%. So, I mean, there is acceleration in the traditional mining sector and processing specifically, and there is development here, and we can clearly mark that development, or at least point to the branches where that development has occurred, like tobacco, food, where there had been some positive developments. And by the way, these positive developments, to fall ahead of our agenda a little, have been reflected in the labor market and export market as well. And as regards the main locomotive of growth, if previously it would be rather reflected in some re-exporting, the processing industry and wholesale trade, currently these effects are not considered anymore. There is a big share of the construction sector in this. I said already that the other branches of processing industry have been positive, at least started positively contributing. And there are certain services where there have been some leaps positively, and that has also been taken into account. So as regards industry, if you look at the statistics for the previous year or years, there were some stable growth indicators starting end of 2024, some good trajectory if you remove, of course, the essential metals and look more on exported minerals, traditional mining and other branches of our economy. So, since we're having some time limitation, now as regards the developments in the IT sector, essentially, you know that in the economic growth there is a significant readjustment for 2024. In fact, these type of growths have been still identified in parallel to the process that we have seen. Meanwhile, in the last several months, we've been seeing higher frequency of data inflow. The currency exchange and this segment, is not that frequent in terms of currency exchange. So this could be the reason of some seasonality, or maybe shifts in seasons, changes. I don't know. These are factors that have to be taken into account in more detail, but this might be the evidence of the fact that the growth that we ensured in this sector since 2022, I mean, with the inflow of capital and labor force, we are coming close to some normalization, and we should not be expecting leaps there. And by the way, we've been conversing this in the last several years, saying that that growth should come to the normal level, and that's both for employment and for conversion.
Now I'm just trying to understand whether we need to cover this or not. Okay, let's go to let's now cover the construction sector as well. You know, when talking about the construction, let's figure it out in which context we need to discuss a couple of things. Actually, say we would focus on the development of the real estate. You know, we regularly keep discussing that some adjustments need to be made, specifically with regards to the deviation, and of course, these adjustments are actually moving or smoothly. Specifically, when we are in parallel, we can see the price policy and the price range of Yerevan versus margins, and also increase in margins or in the regions, and also a sort of a shift of the construction activities itself. And again, when talking about the mortgages, there's been an increase of 3.5%, something that has occurred more or less in a sustainable way. But actually, you might recall that there is some certainty in terms of the scenarios that we were considering, and actually, what we're basically thinking what's going to be the macroeconomic situation after adjustment, whether or not this is going to have a kind of a restraining impact or effect in terms of the macroeconomic actual indicators. So although we do not see any restriction in this, although there might be some statistics, but in terms of the consumption, in terms of investment, and in terms of other factors, say we would look at Q1 indicators, different indicators, we do not encounter significant slowdowns and reductions. So this means that all the phenomena that we're discussing, although all these are possible, and we may encounter them in the medium-term perspective. So in parallel to this, naturally, when talking about the external demand, it continues to be adjusted. I stress the word adjusted, because we right after the large demand, we need some adjustments. Specifically, this is something that we can see with the latest developments in terms of the tourism, because there was an unprecedented increase of the tourists, and it was was a result of the demand. But again, some slight adjustments need to be made here. But the positive development and the trends are there, that as a result of the adjustment of the tourism, so the tourism inflow from other countries again keeps increasing. If again talking about the regional countries, say Georgia, Iran, and a number of other countries. So even from these countries, there is a slightly or somewhat higher rate for tourism as opposed to vis-a-vis the historical rates. Something that's going to somehow compensate the adjustment for the demand. But again, the uncertainty that we have been discussing a lot is still there, in a sense that whether or not in terms of exporting of the services, whether or not we're going to develop a new potential, or this is something that's directly related to or is resulting from the demand. So, and as the situation shows, specifically when talking about non-traditional countries in the region, we can see that we're currently using this potential. And again, there is also recovery for the tourist flows from other countries. Again, during yesterday, during the press conference, Mr. Gaston mentioned that for non-traditional countries, say from Korea, from China, we again have times higher inflows of tourists. So this is a sort of a positive. This may give a sort of an impulse of positive trends. And in general, in reality, when talking about the external demand, once again, we need to stress that the adjustments have taken place. You know why? Because there has been a kind of a stabilization of the inflation in the given sectors, and this is a sort of a clear indication that the external demand has been secured on the account, or given the sustainability that was ensured. We're now talking about a different perspective, internal or domestic demand, or increase of the domestic demand, or somehow build up of the domestic demand. One of the main components of it, something that we specifically stress, is the increase of the lending, and on the other hand is the savings that have been been achieved or secured during the past years, actually something that can also support the building up of internal or domestic demand. Actually, regarding the transfers, we have been discussing the transfers of more than once. Allow me to move forward. But if talking about the transfer, there has been a recovery of the transfer vis-a-vis the previous years. If we look at the statistical data, we can actually evidence this. But again, actually, when talking about transfers in cash, prospective transfers in cash, and fundamental issues related to migration, I mean, these are two uncertainty-related factors that are still there. Specifically, when we're talking about the exchanges, we see that there is a substantial increase as opposed to the ones that are statistically reflected, meaning in the monetary market, actually the exchange are taking place, whereas if looking at the transfers via the banking system, I mean, these the numbers are lower. Actually, something that is actually that were put in the basis of the previous hypothesis that were worked out. Actually, there are some issues that were already covered. We have talked about different parts or different segments of the savings, something that could contribute to this, and also I talked just a bit about the consumption rates, specifically like 15% for the construction, for investment, actually some comparable figures that may contain specific components related to the deviation in terms of statistics. And again, and so even if they are possible, even if we would like filter out these actually deviations, I mean, with even with this, actually these indicators are relatively high, and they come to prove that the demand is at a stable and sustainable level, and actually we do not face any prospective risks of actually negative factors related or associated with the demand. So in this regard, one of the major components, something that can actually impact the fiscal policy and mostly actually the estimates of the government, and something that's reflected in the budget is also something that is considered to be neutral in terms of the prospective impact on the budget. But depending on the structure, we are considering different scenarios. Scenario number one, actually something that's gonna actually give a more incentivizing actually effect. I mean, this is related. Scenario number one is related to the following situation, when there may be a situation associated with the social needs, and then we will top up recent actually development related to the hail and some other weather effects, and again take into account the fact that there have been some allocations from the reserve fund that actually occur or take place. The scenario that we have been regularly considering, and actually the actually rate or the figures or the numbers were going up and down, but these are the two things that are directly linked to the probability of the current actually in effect given the situation. I mean, some situation related to the tax collection, when there may be some sustainable risk that these figures may go down. Actually, so under scenario 2 and 3 actually are going to have a sort of a retaining or restraining impact, actually a bit more than it was originally planned in terms of their prospective impact on the demand. It's related to the structure of capital expenditures and the efficiency, meaning if talking about the structure of capex, that there are some components, something that's actually given the general demand of the economy cannot have a direct impact, although these are important, these are critical. But say if we try to actually filter out or to neutralize these effects, then if talking about the prospective impact of the demand and actually the prospective impact on the capex planned under the budget, then actually they may not have a similar positive effect, meaning they may be more restraining or restricting. So this means that the general budget, actually, if it would also look at those perspective factors, then they would have some restraining effect in terms of the impact on the general economy. So if we would look at the actually demand, and actually then it has become closer to its general actually target in the medium term run. But if we look at the labor market, and actually when there is a high demand and low unemployment rate, actually the picture has somewhat changed, and actually currently the unemployment rate has reached something around 13%, and this is something that is very close to the level of unemployment that's not going to result in inflation. The general uncertainty results from, although we have had a chance to discuss this over and over again for several times, something that is still on the table, and something that we have agreed from actually we're considering the prospective migration flows from from Russian Federation and their integration, and also the influx from Artsakh, and actually the issues related to the employment and whether or not, there's some issues, so not problems but issues, saying that we need to give an answer to the questions whether or not in reality these people who have been displaced or who have moved or migrated to Armenia, whether or not in reality they have been actually integrated in the labor market. And then when going back to the inflation issue, then actually there's sort of an acceleration totaling 4.3% is the total level of inflation. Of course, there is this kind of a slight acceleration, and the main thing that we need to fix here is that it's mostly, can say that it's mostly related to the seasonal commodities and developments related to the seasonal commodities of goods. Say if we look at the vegetables, we have basically pointed out that vegetables, actually we look at the historical trends and the above the historical levels or values actually that were recorded during the past months. For instance, the developments associated with the potato, something that's directly related to the increase or the demand in the Russian market actually for the Armenian potato. And again, there may be two perspective scenarios or perspective developments. Option number one is that this seasonal actually phenomena are somehow are going to have a temporary impact or effect, which means that actually as a result of a leveling out of the cycles where we may have a kind of a other type of trends when we at some point we may reach a point or reach a certain level when the trends are going to be lower than the historical, meaning actually at some point actually the trajectory is going to be lower than the peaks, even actually this is something that we expect during this year. But there are also some other scenarios that we have been discussing with a certain level of probability, and actually it's related to the vegetable groups, say new exporting opportunities of vegetables, and actually like relative adjustment of the prices, meaning when these goods or with these commodities, when we transform into a potato exporting country, then actually the prices need to be adjusted, and actually we need to look at the higher prices, and there may be also some inflation or increase of the prices of the potato, although actually from the monetary perspective it is not an inflation that we need to react, but they may also actually create some issues related to the expectation, inflation expectations, and anything else that should be actually thought of. If talking about other actually demand level related actually inflation issues, actually when talking about the fundamental inflation, then we can see here that actually it's slightly even lower than 3%, actually with something that's comparable to the demand that we have. And again, we're talking about the inflation expectation, we have some positive trends as well. If talking about the general position of the economy, trying to actually speed up and summarize, actually we've already had chance to discuss this, although that we're very, very close to the equilibrium. So this means that the remaining components related to the inflation, related to developments in the labor market, actually, these latest developments point out to this, and in this context, our estimate for the monetary policy is very, very close to neutral in terms of the interest rates and in terms of the real exchange rate and the gap of the real exchange rate, something that's also assessed or estimated to be close to the neutral. It's talking about the market expectations, something that actually all those who have been engaged into this actually have kind of shared with us their actual understanding on this. There needs to be an actual acceleration and stabilization. Actually, when I say acceleration, vis-a-vis the previous year. Actually, if talking about there's going to be a somewhat slowdown of the economic growth, something that's comparable to the longer term potential. And so in this regard, we and again, if talking about the CBA policy, actually there needs to be a reduction. Actually, the expectations are to actually go down and to stabilize the market. So under this, we are considering different scenarios, and actually I hope that you are familiar with some of them. Allow me to stress a couple of those scenarios. Actually something that has just recently been discussed by the board. One is a type A, specifically for the Middle East, with related to the geopolitical situation information and actually latest developments and other related developments. Actually, although we have been discussing possible scenarios, but actually at this stage, specifically the board, in terms of the risks, perspective risks, actually, in terms of considering perspective, actually risks is the scenario associated with the inflation and actually the risk that's going to increase for Armenia and for the region, and also the value chain or the supply chain distortion. So given this distortion, there's may have an inflation as well. Actually, we can see some of the impulses that actually is going to happen, and some of them would also may also be formed in the future. Say, if considering scenario B scenarios, actually these are actually discussions of new perspective types of risks. So something that was related to the adjustment of the sectors that are fed by the external demand, meaning if considering the touristic services and other related services, meaning not linear, like they're considering non-linear impacts or effects, actually with a consideration that perhaps actually when it was a result of a high demand shock, perhaps there has been this created a kind of an understanding of a permanent high revenue. So perhaps these expectations resulted in generating or borrowings, higher level of borrowings, etc. And now when we already are actually addressing adjustments, so in terms of servicing the debt and in terms of the revenues, this may also have an additional accelerative impact in terms of adjusting actually the indicators or the numbers for the sector. So this was yet another impulse that some of our board members have singled out, and something that they considered that attention should be duly paid to these factors as well. So, and of course, I mean, these are the two scenarios, actually, just to illustrate and to communicate. We just single out these two scenarios to actually dive deeper into them. Allow me to reiterate that not because these are the two scenarios that are the most important or the most realistic, because we have been discussing this more than once. This was just for illustration purposes, and even more, these two scenarios are those scenarios that not all of the board members have expressed their views with regard to these scenarios, but you know that during our internal brainstorming we usually summarize the scenarios, and we reflect all those that at least one board member, while making a decision, would make a reference to this perspective scenario or has considered this scenario. Actually, first scenario number one factor is the perspective higher risk, actually, and the US, like longer term higher interest rate, and given the global capital market stricter terms and conditions. So if this happens, then this assumes not only actually high interest rates in the US in the longer run, but also something that's going to be reflected in the actually Armenian and actually is going to impact the domestic market, the interest rate in the domestic market for the full horizon, because here we are talking about like higher interest rate path that meaning given the high interest rate in the global capital markets. And you know, the second thing was the highlighted thing that we've just recently added, and actually something that we've been considering this as case B, as actually this was something that was related to sector specific debt servicing and components associated with debt servicing. So we can see that there is also a kind of a reduction given the increase of the demand in those sectors. So of course we cannot say that these may result in major problems in the sector, but I would love to say that this phenomena may also point out to the fact that given the adjustment of the demand, actually this may result in an acceleration of further amplification of the impacts, and perhaps there may also have create perspective negative impact on the economic environment, and also some drop of the prices, and this may also actually require from from the central bank to actually secure to think about is like lower than the expected interest rates, I mean, so as to secure the neutralization. So this was just very, very briefly, just to summarize. Allow me to stop here. Thank you so much. So if you have any questions that you would love to ask, feel free to raise all the questions, and then this is gonna allow us to clarify. And please make sure you introduce yourself and ask a question, and then we're gonna try to clarify. Thank you, Alex Alexander. I'm representing Converse Bank. Of course, it's absolutely clear that given the recent developments in the recent days, actually the war between Iran and Israel, although actually not much time has elapsed, so actually there's a lot of uncertainty with regard to the future, actually. So this means that you didn't have time to dive deeper into the prospective impacts and consequences of the conflict on the economy, on the financial system, and actually to see this prospective impact on the monetary policy. What I'm interested is to see whether or not you have some analysis, or do you work on some sort of analysis, or whether or not you are evaluating or setting, say from Bandar Abbas, actually, which is our general, which share of our general trade in terms of, if looking at the structure of the trade, which part is actually moving or flowing from Bandar Abbas, and whether or not actually there may be some distortions in terms of logistic support and what came in terms of import. And another question is how it may impact commercial banks and the financial system in general, and how the importing and exporting companies actually their credit worthiness actually, and also perspective liquidity issues and uncertainties associated with the liquidity in the bank. And of course, actually something in the all this to consider within the framework of the monetary policy. And again, actually also the pick up of the food price and of the oil, and actually and also some upward pressures in terms of inflation. So in this says actually the central bank is gonna offer a higher interest rates to move forward. This may be the positive perspective policy that the central bank may actually choose. So it would be good to see what can be the perspective. What's your thinking about these latest developments in terms of if talking about the scenarios. Allow me to cover that part, and then Mr. Khachaturian is gonna talk and share with you the opinion of the board with regard to the policies. Of course, in the last phase or the cycle, actually it was just 1 hour before the final decision was made. I mean, all these recent developments happened, but of course, actually, as a result of teamwork, by the way, headed by Vazgen, we tried to actually single out possible scenarios and to basically end up or mapping the prospective scenarios. Why? Because naturally it's gonna be way difficult to understand what are the perspective actually demonstration of the geopolitical developments. It's not correct to do it. Actually, by the way, the framework allows us to look at the scenarios and to single out or to filter out those scenarios in terms of the decisions, something that it's important for us to secure the manageability. But as you mentioned, actually the scenarios also covering some of the problems. As you said, actually, when we're talking about the distortion of supply chains, I'm not talking about on the ground, but also air, cargo transportation, and also other related costs associated with surpassing those specific areas, actually geographical zones, etc. I mean, all these risks are there, and if talking about the prospective impacts in terms of the economy, in terms of their impact on trade, I mean, they may not be that large, because our import is actually from 120 to 150 million dollars. Actually, this was as a result of a barter of electricity and gas. I mean, I'm talking about the region. Yes, I'm talking about the region. Actually, when talking about as a result of distortion, actually considering the perspective inflation impacts, and when talking about the real impacts, our understanding was that yes, actually this is possible, but actually once quoted, the transfers are going to be made actually based on that adjusted prices. But there may also be an additional increase of demand. Just it was the case in case of Russia, like similar phenomena that we've encountered in case of Russia, when actually in terms of the labor, in terms of actually transportation of labor force, and so on and so forth. Because actually they may also consider Armenia as a prospective zone to move actually to. This is also a possible option, and again they may also be not only positive but also negative scenarios just in those directions. Again, if considering the exporting actually destinations, etc., and because of some difficulties and the problems, there may be some export related problems, so there may be a kind of a general negative and also risk surplus. The board, while discussing the risks, so to make sure that the risks are manageable, we have singled out actually one of the actually scenarios, something that was reflected in the taxonomy. Allow me to pass the floor to Mr. Khachaturian. We could not surpass this topic, although we didn't have chance to get prepared fully to this, and also to actually this also had a substantial impact on the decision that we have made. All these possible actually scenarios, alternative scenarios, with a clear understanding of them. At that moment, our very quick reaction to the given the situation, and given taking into account the available information, was actually a somewhat actually more supportive decision towards scenario A scenario. Actually, all the forecast, all the that you had with regard to an indicator, even the updated information that we received was something that we collected before that. So it's not going to be correct to say actually whether we are above or below that. We do expect to get additional information given the developments. We cannot actually drop any of the scenarios. Actually, from this, actually we cannot say that. Demand increase, decrease, top up on the drop of the demand and the supply is possible. But one thing is evident, that at least in the short run, actually all the possible impediments that Haik pointed out, meaning actually anything related to trade, to tourism, transportation. Actually, the transports reach up to Caspian Sea, actually the neighboring countries. That's important. Actually, not the whole share. Only a small share of trade actually is with that neighboring country, and all this may result in inflation scenarios. And the most important thing is the surplus of risk and then potential change of demand. It depends on what's going to be the general view of the investors about the region. We have very, very shortly and quickly responded to this, and Haik quite correctly reminded me of the situation that was created as a result of Russian-Ukrainian war, and it was really quite difficult for us to see what should be done and could be done. Perhaps actually that we're thinking that could be a kind of a substantial drop of the economy that we need to boost, but it was not the case. It was to the contrary. The economy was hit, although it's a bit difficult to understand what we may expect, that what can be the development, but allow us to, we're gonna actually respond to this. So our strong commitment is to actually the inflation expectations, then the risk surplus, in case of a drastic change of the surplus of risk. Actually, we are gonna do our best so as not to have substantial gap in terms of the demand. And actually the main mandate of the central bank is to secure the sustainability of prices.
So fortunately, financial stability-wise, so the banks' loans scenarios and liquidity, were in a situation where we are not seeing any additional issues here. So quite a pure measure in order to keep the price stability and monetary stability, about 3%. Please. Thank you. Haik Asfanyan, Modex. 6th slide, please. With the tariff impact. This is the general impact on the US. Prices as assessed. Any estimates here for Armenia? Given the US-China tariff story and possible impact on the prices of the imported goods and inflation as consequence of that. So if there have been any such estimates, would you please? Thank you. A couple of important points, and then I'll ask Vazgen to speak about the estimates. Essentially, I mentioned from the very beginning that for the tariff policy in the world as well, drawing an assessment may be based on two components. One is the inflation, naturally contributing to such tariffs in case of disruption of the value chains and chains, and also the overall inflation background in the United States that might have somehow contributed to growth of tariffs, as well as in countries like China, for example, or in the member states of the European Union. But the second background, as established, is the first reaction to the tariffs. It all came when we started drawing a general idea that those statements were negotiable. If they are negotiable, then there is immediately a situation with some uncertainty. Somehow, a new series of cycles that could have even dropped the prices. So we have to deal with both scenarios of prices going up and down. And that has been marked in the agenda of the board. There have been general references to that. As for Armenia specifically, Vazgen Can, I'll give you the floor. Yes, of course, but from the very beginning, as regards the United States, just a short addition of regarding the impact and what we have to be paying attention to. This was quite a significant event, and the consequences of that event on Armenia have to be taken into account on the general map of risks. It could have gone up or down. These could be various scenarios. But as for the American economy, there had been different assessments, and right from the very beginning, they were as follows. Like, if you had conducted a calculation, mere calculation with the basket of consumption, then there would be 2.5% of impact on the American economy. But it's very important to see the situation in the dynamic development thereof, meaning acceleration in inflation will depend on change of demand and the environment in which that demand occurs, and other dynamic developments, meaning routes for import from different countries, etc. So that's where we wanted to approach the issue and consider scenarios in an attempt to understand what would be the inflation in the United States. So we're thinking, if that environment remains, the bargaining power becomes larger and more effects on inflation. But on the other hand, there is also weakening. There was also a different signal that with this uncertainty or uncertainties, it could have gone down. So currently, we have not been seeing any significant impacts on the American inflation, like some tiny signals for household equipment, appliances and toys, but nothing of significance. And there was also change in the foreign policy. So I'm trying to say that we should be looking at these effects in the bigger picture and the overall dynamic. We have very, very tiny impact from all these processes in Armenia, I mean. Okay, so when you say United States, is that only trade wars we have to deal with? Of course not. There is a migration issue in the country, there is less labor force, some cooperation platforms disrupted, I mean, because of the tariffs, certain products that would cross the border 20 times before they become final product for consumption, border with Canada. I mean, in addition, there is also this larger initiative related to reducing certain taxes and increasing costs, and there's also a deficit. Michael already spoke about the debt. There's bigger debt for the United States, and it's not fiction. I mean, that's reality. They're saying that there's no significant impact, but there is significant impact. So the so-called Avengers, debt Avengers, which in case of larger debt would do some things with the public debt. There are issues, aggravating, I should say. So we've been looking at that as a whole, and overpayments. So Vazgen also said that this is the direct impact on the consumption prices. But it's not the most important thing, as Vazgen said. Okay, just a tiny addition. It's not only prices. I mean, if you consider the changes in the trade policy as a general impact on the economy, then I'd like to say that in the report we've published for the previous quarter, there was an attachment describing the impact on our economy, because of the change in the trade policies. But to be very brief, the main message was that either in terms of import or export, America is not among the most important directions, especially in export. It's tiny. And we should also try to understand what we export to the United States, the overall basket of goods. And for every commodity, the share is not large in the overall share of export of that specific product, So, given the diversity, essentially there are not going to be any significant problems for our economy. So the basket of export is small, and it's significantly diversified to enjoy other directions than the United States. That's the point. Please. Ignat Frangyan, C quadrant. My question is about the foreign currency policy of the central bank. For the last 25 weeks, the central bank has conducted more interventions than throughout the whole previous year. I'm trying to understand which is the target of the central bank when making interventions in this market, and to look at the pattern. In the last year and a half, the CB has been quite tolerant in case of devaluation of the AMD, and quite tolerant with valuation, stronger national currency. And inflation has been less than the target, lower, but this year it's higher than the target range. Second question, may we assume? I can't hear the counterpart, no microphone. May we suppose that there have been some behavioral change in the central bank in terms of making interventions in this market? Okay, to start from the last point, 4.3% inflation is the least discussed topic in the monetary round. It was mentioned that we don't see a lot, not a big story, not a big thing with this inflation. So the trajectory is not going to be deviating, in terms of reaching the target. Now, as for the interventions, yes, formally, we do not present the interventions to the market. We've just been announcing. Yes, the currency rates float. When you say a level of currency exchange, it's not that important. So if you pay attention to other foreign currencies, the real balance and the nominal one, I mean, the real and the nominal effective currencies, behavior will show you something completely different, because the ruble becomes stronger, the euro becomes stronger, and the inflation-adjusted picture is completely different, but there's still more value. So as for the interventions, we make interventions, we intervene when the market is not capable of providing for bilaterally sufficient transactions for the price discovery on the market. And it's clear, just because of the size of the market. It could have happened in a country like Armenia. It's small. And there are a lot of limitations the banks have in terms of positions, in terms of depth, and the situation in the market is not that we will be capable of avoiding interventions. Unfortunately, there are no hedge funds, no larger players on this market to tackle any type of inflow, seasonal or whatever it would be. I mean, impact of the prices is significant on the functionality of the market. But in parallel to that, I'm sure you've been through, you've seen the reserves. They're on a decent level for all the targets we've established, but for the part of the transactions, we do that on our own, because in fact we provide the service to the government, and currently we purchase foreign currency for the government to be capable of paying in its Eurasian transactions. So in fact we are the only one servicing the payments by the government in foreign currency respectively. So if we take the classical path, so-called, and are fully capable of segregating and compartmentalizing transactions, like transaction number 1, 10 million USD, and that has like zero impact on our reserves, then it could have been much better. In fact, what we do now is just keeping up the totals in order to keep the parity. Otherwise, imagine a situation where the central bank does not intervene at all, and then the government would just pay from its own tax revenues to pay for like capital assets, construction transactions. They're mostly expressed in foreign currency, and our reserves would be immediately depleted. So in order to service the government, we have the capacity of, we have the demand of holding these transactions. That's everything I can tell you. As for the sources, there is also an extenuating part of the demand, tourism, for example, regulated, adjusted, normalized, if I should say so. Meanwhile, we can still see some inflow from those sundry subsectors of activity, and sometimes it's hard to monitor. It's not traceable. You won't find the end. Did it go to construction sector? Did our compatriots purchase apartments in Armenia? Or these are the profits of our businesses from various transactions, or maybe these are just exchanges of US deposits into our AMD, or the repatriation of capital from different countries given Armenians returning to Armenia. So these are all factors of significance still persisting on the market. Both parties have to be duly described. Please. Edgar Albican, Armdrop Investment. A question addressed to open market functions of the central bank, the repo mostly. So, when looking at the ratings of the central bank for the commercial banks, for the auction then the average rate has grown higher than the refinancing of the central bank, by the central bank, which I suppose is a consequence of higher demand of short-term liquidity in the banks, and the central bank is apparently forced to react So insufficient auction every day, then there will be another one. So I'm just trying to understand, is there any specific policy to bring these closer? Any targets the central bank have established? I mean, the auction rates come closer to the refinancing. Yeah, got that. Okay, so, you know, we should be a little magnanimous here, not to be obsessed with that so much. We decide the rate in the board, and then there will be the respective analysis of the financial markets. There will be certain functions on the market in order to provide for rates not far from those that we decide here. I mean, that's how it works. That's what the auction does. So it's 6.75. It cannot be lower than 6.75, but it can only be higher. It might change in future, not a big thing. In fact, I'm sorry to say it this way. I mean, I'm sorry, but it might seem like I'm condescending to this percentile, like 0.15, whatever, but these ranges that we established, that could have been signals for the deviations, then we do not see and have not seen any situation beyond that point to say that 675 is not translated. Well, it is, and everything's done, and there are also some ongoing technical parts to it. Might be of significance operation-wise, but policy-wise, it doesn't bring any deviation. So it's not policy-based. It's just execution, just a technique. We say it's 675, the market adjusts respectively. Okay. Usually, those percentages, I mean, the interest rates were close. Yes, they're still close to one another. So I've paid attention. If it's 0.1% deviation for a certain period of time, it could have turned into 0.17, 0.14. These are the changes I'm talking about, because technically it has always been above 675. If we do not bring more symmetry to it, I come closer to 7. I mean, it can, for example, impact the bond market. I understand. And our colleagues keep getting into it. In terms of the mandate for the last resort loan provider, nothing has changed. Liquidity is there just as much as necessary. Well, I have well perceived that part, and we even discussed it with our colleagues. And there are certain technical issues in that execution. No specific trends there, no big problems that we can see. Okay, all of that has to be looked at from above. If the goal has not been changed practically, by means of looking from above, we need to do some fine-tuning. What do we do the fine-tuning for? If there are certain technical or any other signals or any patterns of banks or clusters, everything can happen because that's an auction. But if there are things happening there, we don't say, oh, something happened, something wrong. The goal is unchanged. We see things, we say that the ultimate goal is to have impact on a certain rate, then there will be certain fine-tunings done as necessary. So we have to look in it, in the integrity thereof, and put the question in a different way. Would the commercial bank rates fall short or be compatible to the rates we've established? No problems there, at least. Please. Thank you. Second question, related to the GDP growth and possible issues we had in 2024. If you remember, during the second or the third quarter, the Statistical Committee announced that the GDP for the end of 2024, end of 2023 and the first quarter of 2024 was revised, and because of the deviations, because of the gold, and those deviations had been regulated, problems resolved, kind of. So don't you think that you didn't clean it well, didn't purify it sufficiently, to use the slang? Okay, Vazgen will tell. There are certain new types of transactions that bring some noise. Yes, they may also have certain impact on the postings by the central bank. Certain things might be considered normal, and there's also calculation methodology for the added value, and these are issues. There are many things. And at least in the work that we do, we try not to focus on specific quotas to see the longer term deviation from the GDP. We look into many things in parallel, and we've also been in communication with the statistical committee. We try to solve the problem, but the statistical committee, what they are going to be doing in order to get to the point, because there are certain parts related to methodology.
All the hikes actually to some extent cover this topic. So could you please talk about the processing industry? Let's move back to the slide related to the processing industry, because it actually perfectly illustrates the topic. What? Please, slide number 16. Actually, what's the problem here? If talking about the manufacturing processing industry, actually, please look. Actually, please look at the blue line, and also it's the estimates that would say that if talking about the gold, actually, what could be what could be the processing industry if we would drop the gold on anything? Actually, and because what we're basically looking at the issues and other things, so it's absolutely clear that if we could accelerate very, very quickly. So if then later on they revised economic growth in 2023 and Q1 of 2024, actually it moved back, actually closer to the yellow line, meaning in all the sectors when actually there has been an increase, which were not containing actually high value added. Actually, it went back to this. What we basically think that the economic growth was supposed to be actually closer to this line. So if because specifically in those sectors of the industry, it could be just a slight increase. So even if there is a revision in terms of the let me not call it a revision of the economic growth, but other sectors that could also actually impact and increase it positively. Say if we look at them, if there is going to be an upward revision, it's not going to be something unexpected for us. Allow me to also come back to this sector-specific differences. Although your question was not related to that, but allow me to think about the heterogeneity between the sectors. So there's also an issue of related to the potential GDP, and actually in the wording that we use in the document, you might have encountered this, that we need to figure out where are we, zero, are we close to zero, or so actually, for instance, there used to be goal that was very, very high, that positively popped up or picked up GDP as well. So we need to think how it actually makes the general gap positive, because the financial services were high, which is the case even now. Actually, how it positively impacted output gap, because there are some sectors, specifically the restaurants, hotels, where the external demand dropped, whereas in the IT sector we have a horizontal situation in terms of employment, in terms of salaries and remuneration, where we have 5 to 6% increase of the salaries. There is this type of intersectoral issues, and say actually by actually when we're just looking at the general impact on GDP, whether or not we are above or within the band, actually we do not look only at one figure, because this figure may over the quarters it may actually deviate. That's why our judgments actually were based on this assumption. Well, thank you. Yeah, that's it.